Hey there, my name is John Stevenson, also known as the Guaranteed Retirement Guy, and I want to welcome you to the show. Today, we're going to be talking about how to create retirement income that you cannot outlive. So that might seem a little bit far-fetched just because when you think about something that just lasts forever, usually nothing lasts forever, right? But when you look at income especially, you're thinking, well, there's no way I can have retirement income that will last me forever because what if the market fluctuates? Okay, what if we have a big crash? What if my bond portfolio doesn't do what it's supposed to? What if my dividends stop? You know, you might be looking at a lot of different ways to create income for yourself, and you're wondering, how do you do it without ever running out? So we're going to talk about it. And if you've watched any of my videos, you know that I love annuities, especially when you're looking for income for life. Okay. And the reason for that is because when we get to our retirement years, we're usually not focused so much on growth and accumulation like we were the 30 or 40 years prior. We're looking to turn what we've accumulated, okay, what we've worked so hard for, into guaranteed income. And we look at different ways to do it. I mean, we look at annuities, we look at preferred stock, maybe dividends. There's mutual fund portfolios that have some growth and also some reduction of risk, but those fluctuate, okay? And there's a lot of different things that fluctuate, even rentals, okay? If you have real estate, that can fluctuate as well, especially if you have costs associated with that. And then at the end of the day, maybe you just don't want to deal with it. Maybe you're just thinking, hey, I want income, but I don't want the maintenance, okay? I want to be able to enjoy my retirement. And I can understand that. Not that I'm retired yet, but I just took my family on a vacation last week and we went to San Diego. And I meant to work. I meant to do some of these videos. I was actually going to do some of these videos out on the beach, and I didn't. I was so focused on family, and I'll create another video about that where I talk about that trip. But I wanted to enjoy being in the moment, okay? I wanted to enjoy my family fully, enjoy the activities we're doing. You know, San Diego, went to SeaWorld, went to the USS Midway, went to Balboa Park. We did a lot of things, and it was a ton of fun. And it was just so much nicer to be able to focus on it and enjoy it while not having to worry about anything else. And so that's the same for retirement. You might have all these investments that you are busy managing and you enjoy that, but it comes to a point, I think, in our lives where we want to be able to go out and we want to be able to enjoy it and be able to have the retirement income that will not run out, and we don't have to think about it. It allows us to focus on things that we want to focus on. Okay. So I'm going to share my screen and show you how you can do this with an annuity. Okay. So we're looking at someone in Utah. I pulled up someone, let's say they're 63, their spouse is 62, and it's $250,000 premium. Okay, and for this particular example, we're going to say they're going to take income at age 70 and 69 because maybe they've got a job that they love, they don't want to quit work until 70, and that's when, of course, they're going to take out the highest payout in Social Security. So they're thinking, hey, I'm going to take some of this money out of my 401k or my IRA, or even if you just got cash in the bank and you want to throw something into an annuity contract that gives you guaranteed income for life, this can be very helpful. So I am going to show you everything, and you can see there's lots of different companies out there. This is just the first page. Okay, but if you look at the annuity payouts, and I work with every single one of these companies, okay, I know the ins and outs of each of these companies. But you'll notice that the top one is Corebridge. Okay, now when you're watching this video, it might be different for you. Sometimes these companies will go back and forth because they're competitive. Okay, and Corebridge has been on top for a long time, but so is Midland. Ameritas has beat out these companies in different instances, and so has Athene. Okay, so it just depends on the state, depends on you, your age. You might be younger than this, and you might be deferring it for maybe 2 years instead of more time. So there's different companies that are better for different situations. Okay, and when you book a call with me, we'll go over your unique individual circumstance. Okay, so if you're looking at, hey, I want income right now, then we're going to look at the best companies for that. Or if you want income in 1 year, we're going to look at the very, very best payouts for that, because there are different contracts that are best for immediate, 1, 2, 3 year deferrals, and a lot longer. Okay. So you'll notice on this one, for this example, if they wait till 70, they're going to get just shy of $30,000 a year in guaranteed income the rest of their lives. This is for both of their lives. So if they take this out for 30 years, they live to a ripe old age of 100 years old, they're going to take out $900,000. That's really good. When you look at $250,000 investment, that's really good. Okay, so when you're looking at income that you can't outlive, this is, in my opinion, one of the best options that you can do to hedge against that uncertainty. Now, when we look at these income products, okay, this is an income rider attached to a fixed index annuity contract. These typically will pay out the highest payouts, even beyond SPIA and DIAs. Not all the time, but I would say 99% of the time when I look at these, they will pay out more in annual income than any other option. So you can go to my website, go to johnstevenson.com. You'll be able to play with the calculators there and you can see for yourself. Okay. And then if you want to book a call with me and you want to talk about annuities for your own situation, feel free to do so. All right. So if we look at Corebridge, just going back to this, I'm going to pull up the illustration. Okay. So yes, it's paying me $30,000 a year, but what does that look like? Okay. Well, you can see they give you two scenarios. One is guaranteed and one is hypothetical. Now, the only difference between these two is the account value. Okay. It is not the income. So you notice the income on the hypothetical is the same as a guaranteed. I mean, if you live to 95, you've taken out almost 800 grand. Okay. If you look at the guaranteed side, it's the same income, nothing changes. The only difference is they show the account value going down faster because they're showing no growth. And this is tied to the S&P 500. So they're just saying if this index earns nothing and you earn no credits, then your account balance is just going to go down faster. And therefore, your death benefit, if you look over here to the right, you will see that goes down. Goes down in correlation with the account value. So that is there. So if you were to pass away early, you and your spouse, especially if you're taking joint income, then that death benefit will be there for your beneficiaries. Now, again, this is an income product. It's focused on income. If you're looking for growth and legacy, there's other products for that, and we can talk about that. And I've got other videos that talk about that. But for this, we're looking at, all right, we want a pension. We want a $30,000 a year guaranteed pension, and we're doing it with $250,000. It is very cut and dry. Okay, so if you look at that, you see that runs out in the guaranteed scenario, showing, hey, if there's no index growth, no nothing, worst case scenario, it'll run out by the time you're 77. Then if you look down at the hypothetical, the income's the same, but it just lasts like 1 or 2 years longer. So it's not a huge difference in the account value. So, and people, sometimes this is really, really important. And if it is, then we can look at options that will give you less income, less lifetime income, and your account balance will last longer for your beneficiaries. So you can do that. Most people don't do that because you kind of get the worst of both worlds instead of the best. You don't get as much income and the legacy benefit is there, but it still goes down over time. So it just lasts longer. What I would do and what I do set up for people is income products. Okay, we set up these income products that will give them the highest guarantees for their pension. And then we look at growth products, look at MYGAs, fixed index annuities with companies that have a high renewal rate for the indexes. Make sure you're choosing the right indexes so you actually have the growth that is illustrated. It's a lot of things that goes into that because a lot of times, and if you have a fixed index annuity, you might be experiencing terrible growth. And it's probably just because you were in the wrong index or maybe the wrong product altogether. And it just wasn't properly explained. Or maybe the guy who sold it to you didn't know enough about your situation, or they just didn't have access to the right annuity contracts for you. Okay. So I look at everything. I think it's really, really important. And when you talk to someone about annuity contracts, you need to talk to someone who is an expert. That's myself. That's all I do. Okay. That's all I specialize in. So if you want to book a call, there's a link below this video. There's a link on my website, johnstevenson.com, and you can book a call with me and we'll chat. We'll get on a Zoom call. We'll look at my screen and I'll be able to show you everything that's available and we'll just kind of see exactly what you're looking for. Okay. Fair enough. Won't try to sell you anything, but I will show you what's available for you. Okay. So happy to help. Would love to help. And I hope this video is helpful. If it is, hope you like, hope you subscribe, hope you share it with your friends, and I hope you comment, okay? If you comment, I'm going to answer, and would love to answer any questions that you might have. So I really appreciate you watching, and we'll see you in the next video.